Here we have a bullish trend. After the market was overextended to the upside, this indicator indicated that the market has a 100% probability of reversing to the downside. If we were to take a short position here, place the stop loss above the most recent swing high, and set the take profit at 1.5 times the risk, you can see the trade was profitable. Next, we had a bearish trend, and once again, the indicator indicated a 100% probability of reversing to the upside. We take a long position, set the stop loss at the swing low, target 1.5 times the risk for our take profit, and as you can see, the trade was also profitable. Ladies and gentlemen, this is the trend reversal probability indicator, a super powerful trend reversal tool that you can use to identify when the market is about to change direction. In this video, we're gonna go over what this indicator is and how you can use it in your trading. If you happen to find value, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 5-minute time frame of GBP JPY. Next, you want to click on Indicators and type in Trend Reversal Probability, and you want to select this one by ALGO-ALPHA. This is the all-powerful trend reversal probability indicator, and I know you may be thinking, what exactly is it? Well, it's a tool designed to help traders estimate the likelihood of a trend reversal using statistical probability and a custom oscillator. It's particularly useful for identifying when the trend is overextended and due for a shift. As you can see, it's a super simple indicator, and these are the components. First of all, we have the trend duration histogram, which represents the trend duration in terms of probability. A green histogram indicates an uptrend, while a red histogram indicates a downtrend. The histogram can extend as high as possible, meaning the longer it extends, the longer the trend has persisted. As the histogram bars approach the higher probability zones, the likelihood of a trend reversal increases. Now, you may be thinking, but what are higher probability zones? Well, that brings us to the second component of this indicator, which is standard deviation levels. These horizontal lines represent standard deviation levels of trend duration. As you can see, we have key levels starting with 14%, which is the lowest zone, indicating super low probability of a trend reversal, basically meaning the trend is still in its normal range. And then we have 50%, which indicates normal trend duration with no immediate reversal signs. Next, we have 84%, the middle zone, which indicates a moderately extended trend where a trend reversal could happen soon. And then we have 98%, the second highest zone, indicating a high probability of a trend reversal. Lastly, up at the top, we have the 99%, the topmost level, indicating extremely rare trend durations with a high likelihood of a trend reversal. These standard deviation levels work in conjunction with the trend duration histogram to produce trade entries. As the green histogram grows and reaches the uppermost standard deviation level, it means that the bullish trend is statistically overextended based on historical data, suggesting that the trend may soon reverse to the downside, making it a good time to prepare for short positions. Conversely, as the red histogram grows and reaches the uppermost standard deviation level, it indicates that the bearish trend has lasted longer than usual, suggesting that the trend may soon reverse to the upside and making it a good time to prepare for long positions. Now remember, these are probabilistic signals, so it's good practice to confirm with other indicators like volume, price action, or moving averages before entering a trade. Now, going back into the components of the indicator, we have the reversal probability table. This table shows real-time probability values of a reversal happening with different probability levels displayed in percentages. Next, we're going to take a look at the settings of this indicator and see how customizable it can be. After that, we will go over how we can use it to trade. First of all, we have the oscillator length with a default value of 20. This controls the length of the custom oscillator that the indicator uses to measure the strength of trends and reversals. A higher value is going to smooth out price fluctuations, making reversals less frequent but more reliable. A lower value is going to make the indicator react faster to price changes, increasing increasing sensitivity, but can also increase false signals. So finding a balance between both worlds is recommended. And then we can enable probability levels. This setting activates these horizontal lines that help visualize the trend strength. Here we can also change the colors for bullish and bearish histograms. The Style tab has several customizable options that we can toggle on or off. For me, I'm gonna stick with the default values. After that, click OK. So the way this indicator works is as simple as this. It first detects market momentum and direction using a dual SMA strategy combined with an RSI-like transformation. It then tracks trend durations, calculates the average trend length, and plots standard deviation levels to estimate when a trend is statistically overextended. And then using a cumulative probability function, it determines the likelihood of a trend reversal, displaying key probability levels in a data table like this. That may seem like a lot, which is why we're gonna jump straight into the practical application by adding the MACD indicator. And then we'll go over how to take trades using both indicators. After adding the MACD, you wanna double-click on it, and then on the Style tab, you wanna disable the MACD line and the signal line options. After that, click OK. Now, to take a long position, condition number 1, you wanna have a bearish trend, so we can wait for it to reverse to the upside. How do we confirm a bearish trend, you may be thinking? Well, you want to have a red histogram on the trend reversal indicator, like this. Condition number 2, we want that bearish trend to be overextended to the downside. And the way we confirm that is by waiting for the histogram to go above the 99% standard deviation level. That indicates that the market has over a 99% probability of reversing to the upside. Once we have that, we then wait for a green histogram bar to be printed on the trend reversal indicator. Here, as you can see, we have a tiny green histogram bar, which signals that it's time to start looking for long positions. Now, we don't just enter on a red candle. We need to wait for a green candle to be printed. So we're gonna need a green histogram down here and a green candle on the chart to increase the probability of the price going up. So once we have a green histogram bar and a green candle, the last condition is to confirm a bullish momentum using the MACD indicator. You basically want to look at the most recent histogram bar on the MACD and ensure it's also green. With green on the chart candle, a green histogram bar on the reversal indicator, and a green bar on the MACD, we take a long position. Stop loss goes under the most recent swing low, target a 1 to 1.5 risk-reward ratio, let the trade run, and it was profitable. Now, to give you a better understanding, here is another long position. As you can see, the trend was bearish, indicated by the red histogram on the trend reversal indicator. The bearish trend became overextended when the red histogram moved above the uppermost standard deviation level, showing over 99% probability of an upward reversal. At this point, the reversal probability table shows 100% chance of the price going up. Now remember, 100% doesn't mean it's guaranteed. It's just a statistical probability. That's why we need to wait for the histogram to shift to green and align it with a green candle on the chart. Right here, we have a green histogram bar on the trend reversal indicator, signaling a bullish momentum. Looking at the chart, you can see we have a green candle. Now, our last condition is to make sure that on this entry candle, the MACD histogram bar corresponding to it is also green to indicate strong enough bullish momentum. As you can see, it is. Take a long position, stop loss under the swing low, take profit at 1.5 times the risk, letting the trade run, and it was profitable. Now, for a short position, we're gonna do the opposite. Condition number 1. Ensure the market trend is bullish by having a green trend duration histogram. Condition number 2. You want to confirm that the bullish trend is overextended to the upside by watching for the histogram to go above the uppermost standard deviation level, indicating over 99% chance of reversal to the downside. After that, we need to see exhaustion of this bullish trend, so we wait for the trend ribbon to shift from green to red. Next, we'll look at the chart to confirm that the candle is also red. If it's green, we keep waiting until a red candle appears. Now, with a red candle, our final condition is to check the MACD and ensure the most recent histogram bar is red, confirming sufficient bearish momentum. We take a short position, place the stop loss at the most recent swing high, target 1.5 times the risk, let the trade run, and as you can see, the trade was profitable. Ladies and gentlemen, the strategy showcased in this video is not a complete trading strategy because it's made using only indicators. Go ahead and figure out what other conditions you can add to make this strategy super profitable. That's been it for this video. I really hope you found some value. If you did, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.